Hey, welcome to the weekly review of my trades for the Briefing Trader service. I am your host, BlueChipTrader, and for those of you who are not familiar with my trading style, I am considered to be a swing trader who mainly looks to take a position, long or short, for a few days, sometimes up to a few weeks. However, depending on the market conditions and how I feel about the way things are developing, once I am in a position, I have been known to take profits as well as losses a little bit sooner than I originally planned. So to review the trades over the last week, we're going to start this is for the week of going into August 24th up to, and I am extending this a little bit more to the end of the month, August 31st, which is also a Monday. So what happened about a week and a half ago, the markets came under significant selling pressure, and going into the end of Friday afternoon, I had this hunch that maybe the markets were going to gap down on Monday morning, considering the way they were behaving, and there was this aggressive selling pressure going on during a Friday afternoon. So we shorted the Russell 2000 IWM ETF around 150, just in case the markets did do what I expected them to do. We figured that maybe worst case scenario, maybe they would just kind of open a little bit higher and we'd be able to cover before, without any significant damage. But we felt like there should be some sort of short hedging going on here to protect some of the small long positions that we had started to buy a little bit on that Friday. And fast forward to August 24th, the markets were significantly poised for a very large down opening. This is when the Dow, I believe, dropped over 1,000 points in the first 15 minutes of the day. And fortunately, we were positioned to take advantage of that. So we shorted this around 115 on Friday, and we started covering around the 108, 109 area for about a 6-point profit. That was helpful because we did actually have a few long positions that was kind of lingering on there, which we did hedge against. And overall, my basic premise for the whole summer, especially when we went into early August, was that the market was we were in the summer doldrum phase, and a lot of the conditions were kind of deteriorating as at the last few weeks here. So I was definitely advocating taking on smaller size, trading a little less. Just wasn't really too excited about it. I feel like everyone was going on summer vacations. Even myself, I took a few days off. So it was just one of these markets where you just kind of had to sit tight. One of the positions that we had taken in early August was T-Mobile, and we bought into this stock had pulled back in early August, and we bought into it around $41. Didn't really see much follow through the next few days, but didn't even see much downside as well. I like the stock because it did break out, and it was holding this broke out above this resistance area around 39.40, and it seemed to have been holding it pretty well. So we held on to it. It had broken out over 42. We took a small partial profit of about +1, and then it started to roll over with the rest of the market. I felt like there was enough support here, longer term based here, as well as the 50-day moving average, that I did not sell it out that Friday, which is why I established a short hedge against it with the IWM. And good thing I did, because the small remaining position did gap down and sell off that early morning. I did not get rid of it, only because I had already taken a partial profit. I was already trading small size to begin with, and because it was also hedged as well. It did come bouncing back a little bit. I just stuck it out for another day or two to see how much more I can get out of it, and we wound up covering it right around 40 for a small loss. I think overall the whole trade was we took a really small loss on it. It wasn't a scratch, but we took a small loss. Another stock that I had come into long when the market gapped down was Wayfair. Wayfair, I really like the stock based upon the breakout that it formed in early August. It had strong relative strength. We saw it pull back a few days, came into this gap support level here. I believe this was earnings. And the 20-day moving average, the 10-day moving average, started to bounce a little bit, so we took a position around $43, I believe, and $42, I'm sorry. And then, lo and behold, come Monday morning, August 24th, we had a gapping down with the market down to the 50-day moving average, closing the gap. And again, because I was already short the IWM as a hedge, the damage was really kind of minimal. It kind of just canceled each other out. And I actually advocated adding to this position if you could, once I saw the markets were kind of really deeply oversold and starting to bounce. So I did average out a position for a better price around $41, $42. And again, couldn't find much upside here during the rest of the week to get back above the 10-day moving average. And I just wound up scratching it out here around 42. BABA was another trade that broke down the week before below $70 to all-time lows. It IPO'd about a year ago and breaking below $70. I feel like this one, with China, breaking down, this stock has already been down for about 5 or 6 days. It was in new low ground territory, and I felt like it was possibly something that could bounce, going into the end of August. So I took on a really small position, like quarter size here, below 70, in the 69, 68 area. And when it gapped down on Monday, it was a significant loss. But as I said earlier, I was already short the IWM against these small long positions I've had. So it kind of offset much of the gains. It didn't really offset a 10-point gain. It did look like a loss. But one of my philosophies is not to panic sell out of the first 15 minutes of a big gap down against you. In my mind, the damage has already been done. So it's just a matter of just kind of see how it plays out and don't make any sort of irrational decisions. And fortunately, the stock did come roaring back pretty quickly. And once I saw the selling pressure was alleviated during the first 15 minutes of the day on Monday, August 24th, I started to add back to the position around 64, 65 area to get a better average price. Good for us is that over the next 3 days, it did actually pop up as high as $71, $72, I believe. And that was good for about a $3, $4 profit on the swing before it turned around and stopped us out below break even. Micron was another stock. I had actually traded this one about a month ago when after earnings, when it started breaking down below the $19, $18 area. Started establishing a swing position in it for holding it, and we managed to sell most of it out at $20, and just kind of sat with it there for a while as I held above 18. Got rid of it into this part of August when it started breaking down below 18, and then once the selling pressure really started to kick in, I started getting interested in the stock again around $15, and the broader market selling off. The stock didn't really see too much downside. I mean, it cracked the $14 level, and I just added to the position again for a better average price around $14.50, $14.65, and it just turned into a fantastic swing here for a 10, 15% gain here as it shot back up over 16 this week. Wind Resorts, this is one of these stocks that you place a trade in it and you lose, and then you place another trade in it at what you think is a better price, and you lose again, and it just becomes almost like almost like you keep seeking out vengeance on this trade. And this is kind of what's happened here. I initially bought this about 2 weeks ago at the $90 level, thinking it had been down 7 days in a row. $90 seemed like a good psychological level, and immediately the next day I was stopped out for the loss. Fast forward to August 24th, and you can see the stock made a significant gap down and started to reverse. So I suggested buying a little bit. I was looking for some sort of pop back up over $80 to take advantage of that, to close above $80 on a swing basis. And the next day, it kind of sold off, and then it broke down again and stopped me out of that trade for about a $3 loss. And the next day, it turned around, and I jumped back in for another small position, thinking it would, again, this time with the rest of the market rallying, we'd see some sort of pop back over $80, back to the 10-day moving average, maybe even close some of these gaps here. And you can see that's just not happening. So right now I'm still sitting with it. And, as long as it kind of holds in this mid 75 area, 75 vicinity, hopefully there's going to be some sort of stronger thrust to at least kind of recoup some of this lost ground here into early September. It's possible that this stock was just being cleared off the books of portfolio managers at the end of August. It's been a laggard, so there's definitely been a lot of losses taken in it, and maybe here in early September, going into Labor Day weekend, maybe new money starts flowing back into it for a nice move. We'll see. Netflix, this was a leading stock on the bounce. It's actually a leading stock on one of our focus lists that focuses on relative strength. And you could see on August 24th, it had a significant gap down of almost 20 points and rallied strong. And the next day, it actually gapped up back to those highs. So it looks like it sold off during the first hour, managed to hold the 102 area for support. And I suggested going long, probably around, I think it was mid 103s that I went long. And we got a little pop out of it, maybe 106 and a half or $2 or so. But I was really kind of looking for something bigger to close this gap up here around 110, 112. So I managed to just sit it out, and into the final hour of the day, the stock sold off, closed on session lows, and I just took the loss because the market was so crazy and so volatile. I didn't want to mess around thinking maybe it could potentially gap at 5 points lower the next day, or worse. So I just kind of took the small loss into the close there on that day for about two and a half, $3. Turned out, gapped up again the next day, sold off, held the 102, 103 support level, and then just kind of took off from there. But by that time, I had already moved on to a different opportunity. One of them being energy stocks. Schlumberger, or Schlumberger, was aggressively being sold off during mid-August, and energy stocks as a whole were just kind of getting pummeled, extending their 1-year downtrend lines to just ridiculous levels. The slope of these lines just kind of went into a nosedive, and the bullish percentage charts, if you follow those, they track the number of point and figure charts that are on sell signals for a particular group, and the bullish percentage charts for the energy sector actually said was at extremely low reading, a reading that we've only seen maybe like 5 or 6 times over the last 15 years. So with that being said, taking that into context of how aggressive the sell-off was, it kind of told you that, this could have been some sort of climactic selling or distribution that was going on. What was really the nail in the coffin for me was, Monday was the big gap down. Tuesday, you could see the stock was weak. And then on Wednesday, the company announced that they were going to take over CAM, C-A-M. And the stock gapped down on that news. But it started to accumulate around the $68, $69, $70 area, which I really found intriguing because despite all the turmoil and all the underperformance that's been going on in the energy sector over the last year, here comes Schlumberger's management, and they decide that they see value in another company and want to take it over. That's probably really, really smart management, or it's probably the dumbest management in the world. I don't know which one it is, but I found technically that basically created a extremely short-term oversold stock that was just poised for a bounce in a group that was extremely oversold. And so we started accumulating the stock underneath $70 all day. And fortunately for us, did pop higher the next day. We took a little partial profit. And then the next target was really this gap here from Monday that we were looking to close here around 76, 77 area, which we got today. So it was a really nice gain here that we saw the last 3 days in this stock. With the money kind of flowing back into the energy sector, into a really oversold energy sector this week, I kind of took the stance that it's possible to see that an overweighted sector, a sector that's been loved for so long, might not get that same sort of love or money flow back into it. And that sector would be biotech. It's been a hot sector for 2, maybe 3 years now. And I feel like the dynamics may be changing a little bit here in this recent correction, where the overweighted sector is people are probably looking to reduce their exposure to this sector going forward. And that's kind of my take on it. The way I see all these charts are showing a lot of breakdowns.
And I feel like the money's going to be coming out of this overweighted sector and being rotated into a sector that's been extremely weak and underperforming, and possibly seeing some signs of valuation or cheapness to it. And I think I kind of getting that feel with the energy complex and basic material complex here during this last week. So with that regard, I did take a swing long in the BIS, which is the ultra short biotechnology ETF. You can see it had a really strong kind of breakout here in mid-August and pulled back to the support area in the 29.30 area, 20-day moving average. And it felt like a good spot to just start, buying a small shares, nothing major, just in case this whole theory of money flowing out of, a really strong sector like biotechnology and rotating into some of the weaker sectors for a better bounce. You can see there's also this inverted head and shoulder like pattern I created here the last 3 months. So if it's going to hold true, it's going to stay above this 29.30 area. If not, then I'll be long gone out of it. With the spiders rallying this week, which was a really nice bounce, I felt like the 2,000 mark in the S&P, which correlates with the 200 mark in the SPY, was probably going to be an area of resistance on this bounce. And you could see that it kind of just fell short of the 200 mark. And with that said, I felt like the longs that I had out there, I needed to get some sort of hedge back on out there. And so last Friday, I started shorted a small piece around 199 against the Schlumberger long and the BIS long as well, and just kind of just threw it out there, thinking if the market did start correcting into the end of August and really started to sell off during early September, I wanted to have some sort of short hedge going on out there, just to protect some of the profits that I caught on the bounce. Now going forward, obviously the bulls are going to want to push the market back up above the 2,000 mark in the S&P, where sellers are going to try to slam everything down back below last week's highs and closing prices. So those are just some support areas and resistance areas we want to keep in mind. VMW was a position that I just kind of closed out. I originally took an early trade back in early August on this gap down reversal move here around $83. I had sold most of the profits on the $2 profit for $4 in 2 days, and sold out majority of my remaining holdings here around 88, 89. It started to roll over pretty hard, but I gave it the benefit of the doubt. So it gapped down on Monday, and again I had that IWM hedge going on, and it was just a small size, so I wasn't really too concerned. And then I gapped down again on Wednesday, and that was when I was just ready to just cut the remaining shares loose of it before it started to eat away at some of the gains that I had taken earlier August. So I was just okay to get rid of it. Another position that I took recently was a long in the gold miners ETF, GDX. And the reason I did so was because the bullish percentage charts, they were at near zero levels, which is extremely low. And it suggests that everything in this sector is on a sell signal. And with this group already being a significant underperformer and in a massive downtrend and an aggressive sell-off the last few days, I felt like this double bottom here in August could act as a support level and with everyone sort of panicking about or getting too nervous about the market, if it did start to roll over again, perhaps the gold sector might find some sort of bid at maybe as a safe haven of sorts. So I just kind of took a long took a long on Friday, right around the 14 level, just willing to risk it, just a loose dollar here because I kind of like that 13 support. And that pretty much wraps up the end of the trades for the week. So hopefully you learned something. If you have any questions, you can email me at swingtrader@briefing.com, or you can take a free trial of our Briefing Trader service. Thank you.